Good morning, everybody. Welcome to Windsor Brokers live daily market outlook for Friday, 18th of January 2013. At the beginning, apologies for a delay. We faced some technical problems. As I can see, a number of people have already left the session. Anyway, you can find it later on recorded version in the YouTube. We faced some technical issues, and it took us some time to solve the problem. So not to waste time in today's today's session, that is going to be slightly shorter than the others. Start with the highlights of the overnight session and yesterday that basically moved the markets significantly. Yesterday's data from the United States, quite supportive jobless claims, and the housing data pushed the single currency significantly higher against the dollar, as well as commodities. While the highlight of the overnight session is Chinese data we mentioned yesterday, showing that the Chinese economy gained speed in the final quarter of 2012, and shows signals of recovery from the slowest economic growth year since 1999, with the GDP coming at 7.9%, beating the forecast of 7.8%. Showing that Chinese economy is again back on the right track for a stronger recovery. As we said yesterday, U.S. housing and the labor data provide upbeat signs on U.S. economy. The significant drop in jobless claims by 37,000 is the initial signal, and then housing data came as another supportive element that pushed the market significantly higher, especially the single currency, as well as gold and the crude oil, while dollar yen benefited on the comments from Bank of Japan officials that are having their policy meeting next week, 21st and the 22nd of June, with the Bank of Japan expected to take bold action in order to support the economy from the significantly weakening Japanese yen. The Bank of Japan will consider making an open-ended commitment next week to buy government bonds and other assets until 2% inflation is in sight and the economy is on a more solid footing, according to the comments of the sources. The central bank will also consider scrapping interest it pays on banks' reserves that pays on banks' reserves. Faced with the relentless pressure from Prime Minister Abe to do more to pull Japan out of deflation, the Bank of Japan is expected to double its inflation target and possibly boost its long-running asset buying scheme at today's policy review that starts on Monday and ends on Tuesday, when we have we'll have the result. Another significant comment was from British Prime Minister Cameron, who said that Britain will likely drift out of the European Union and the European project will fail unless the bloc tackles three serious problems it faces. That was the comment of the British. This is basically the comments that British Prime Minister David Cameron had planned to say in the postponed speech that is due today. He delayed the long-anticipated address on Europe at the last minute to deal with the hostage crisis in Algeria, and he's expected to spell out his plans to renegotiate Britain's membership in the 27-nation bloc and to promise a rare referendum on any deal. He struck some politicians said that move could redefine Britain's role in the world, aligned key allies and determine Cameron's own political fate. Also, the Cameron had been planning to say that the EU faces three major challenges: the Eurozone debt crisis, faltering competitiveness, and declining public support, particularly in Britain. He said if we don't address these challenges, the danger is that Europe will fail and the British people will drift towards the exit. And he does not want this to happen. Cameron said he wants the European Union to be a success, and he wants a relationship between Britain and the EU that keep it on all the time. From the markets, euro holds positive, some reversal seen at the beginning of European session, but still holding close to the recent 134 peak as yesterday's rally approached this level, with the Japanese yen weakening further, hitting fresh 2.5-year lows against the US dollar on a break above psychological 90 barrier. We had some brief break higher to 90.19 so far, while dollar Swiss enjoys the recent gains after yesterday's unsuccessful attempts twice above 93.00 barrier. 93.50 zone has been hit, and then the price quickly returning. Now the 93.87 seen so far, approaching 94.00 psychological barrier, and the 94.30 previous highs, and the 200 days moving average. From the commodities, crude oil cracked 96 barrier on yesterday's rally to 96.02 so far, with some corrective action, correcting easing seen post the latest rally, while gold remains well supported. Yesterday's high seen at 16.97, surpassing the barrier at 16.94, and now eyeing the possibly the 1700 as psychological resistance that is seen as a break point for the yellow metal. A brief correction so far being contained at approximately 1685, and seeing more potential towards the downside. And these were the highlights of today. We're going to take a quick look at the calendar. As said, Chinese GDP for fourth quarter came unexpectedly higher, 7.9 versus 7.4 in the previous third quarter, and versus better than the forecasted 7.8%. Fixed asset investments in December came slightly below the expectations and previous release at 20.7. 20.6 was today's release, with the industrial production jumping to 10.3% compared to 10.1% in November, and 10.2% forecast, while retail sales jumped to 15.2% versus 14.9% release of month of November, and 15% forecasted. Japanese industrial production revised for November showed slight signs of improvement, -1.4 release compared to -1.7 October release, and the forecast still to come. Retail sales in December at 9:30 GMT, a 0.2% improvement from 0% in November, and then a few data from Americas. Manufacturing sales from Canada due at 13:30 at 0.9% improvement from a draw of 1.4% in October, and University of Michigan consumer sentiment for January from United States due at 14:55, expected to improve to 75.1 compared to 72.9 of the previous release. And that will be all for from today's economic indicators release. And not to waste more time, we're going to move to the currencies and commodities to see the technicals for today, starting with single currency. Rally from a higher base at 132.55 posted 2 days ago, approached psychological and strong barrier at previous high at 134.00, 133.97 seen so far, with the pullback seen at the beginning of European session, still keeping the bulls firmly in play, as hourly and 4-hour indicators hold a positive tone and see more focus towards the upside. Any reversal that is currently underway tested basically the first support at 133.60. That is the overnight low, and then we have 133.30 minor support ahead of more significant previous tops at 133.00. This is also marking approximately 23.6% retracement of the upleg from 129.96 to 133.34.02, and it's reinforced by ascending 55 days exponential moving average, currently at 132.70. Basically, the 133 should ideally contain in order to keep, while any dips lower towards 132.55 would not still be harmful, as long as 55 days exponential moving average will hold stronger reversals on the upside. Targets above 134.00 at 134.85, which is February 2012 high. This is approximately this one. and 135.00 around figure resistance. This also marks Fibonacci expansion 76.4% of the wave upwave from 126.60 that could travel as high as 135.07 as initial barrier, where we also have the weekly 200 days moving average. Near-term structure still maintains bullish tone despite recent pullback, and basically only break below 132.55 would weaken the immediate structure. British pound remains under heavy pressure as investors are awaiting the release of retail sales from UK, but negative tone continues to dominate on the lower time frames. It keeps pushing the pair lower, with yesterday's fresh low seen at 159.54. The latest one is at 159.38. Likely the pair is heading towards the next target, which is at 159.00, better seen on the daily chart, where we have the 200 days moving average, and 159.00 is also the psychological round figure support. That might be break of which might open way for full retracement of the recovery rally from mid-November low at 158.86 that peaked at 163.80. As that negative tone that dominates keeps the downside firmly in focus, and we have the immediate target at 159.00. Any retracement faces 160 as a psychological resistance, reinforced by hourly descending 55 days exponential moving average, and the 164.30-40 zone that should cap any stronger bounce higher to maintain immediate bearish tone. Dollar yen continues to head higher, 90.19, as we said, fresh high after breaking above previous high at 89.68. Seeing now potential for further extension higher. A positive tone, but overbought conditions on all lower and higher, larger time frames still continues to drive the price higher despite the overbought conditions, as we can see on hourly and 4 as well as daily that are all extreme, especially dailies that are extremely overextended, but unobstructed rally is still underway, and we'll be looking likely for extension up towards 90, 50, 91, and possibly the high of May 2010 at 92.87 that may come in the near-term focus. Before this, we have 92 previous highs, and the psychological resistance. Immediate barrier is 90.39, 76.4% Fibonacci retracement of the larger decline from 97 peak of 2010. That to 75.56 that is seen as the next one, and then 92 zone 92.80 seen as the next upside. The targets from the downside, immediate support is overnight low at 89.62, and the previous high seen as a near-term initial support, while any further dips should be in any way contained above 89.00 in order to keep the immediate bullish structure, with the 55 days exponential moving average offering good support, along with the yesterday's intraday low at 89.21, seeing as ideal reversal point in case of any deeper reversal. Only loss of previous low at 87.78 posted on 16th of January would more significantly harm the near-term bulls, and as this would be a signal for some stronger corrective action of so far very strong rally that registered no significant corrective actions. And finally, from currencies, dollar Swiss remains well supported. A break above the recent congestion. Yesterday's two attempts that failed finally resulted in overnight rally that peaked at 93.87, approaching psychological 94.00 support, with the bulls being now firmly in play on the lower time frame studies, seeing potential for test of 94.00, where we also have the 76.4% Fibonacci retracement of the down leg from 95.11 to 90.77. A break above 93.81, that was our initial target that was cracked on overnight's rally to 93.87. Clear break here, basically clear break above 94 is to confirm the base at 90.80, 91.00 zone, and allow for a stronger recovery of 95.11 to 90.80 descent, with the immediate targets above 94 seen at 94.30, where we have the previous tops, and of course the 200 days moving average currently at 94.31 seen as the next upside targets and quite strong barriers. Corrective action might precede fresh rally as near-term indicators are overbought, especially the 4-hour chart studies that are coming start now to move sideways in a way. RSI is already in the overbought territory. We might see some hesitation and around this zone on approach to 94.00, but overall tone remains positive, with the previous highs at 93.50 now offering initial 93.50, 93.30 zone offering initial support, along with the 93.00 strong support zone, previous high of 4th of January, and the recent range floor reinforced by ascending 20 days exponential moving average on the 4-hour chart. Ideally, any dips should be contained at 93 zone in order to keep the focus, immediate focus at 94 and 94.30 hour upside targets. A quick look at the commodities. Crude oil remains well supported for now as a fresh stretch above recent range and the previous high at 94.68 exceeded 95.00, and our initial target at 95.33 Fibonacci 161.8% expansion to 96.02, cracking the next psychological barrier at 96.00. That sees the potential for further extension higher and slightly bringing slowly the psychological and strong barrier of $100 per barrel in the near term site. Next barrier, the only one basically I would say, as the recent fall, a sharp fall shows no significant barriers, will be 76.4% retracement of the downleg from 172 to 84.05 at 96.79, lift above 96.00. We'll focus this level seen as the next, and then we have another one at 97.50. Basically, the bulls remain in the play and they look for a test of the upside barriers, especially if market closes today above 96.00. That will keep the bullish structure fully in play for possible stretch towards $100 per barrel in the near term. From the downside, immediate support overnight lows at 95 zone, ahead of previous range tops at 94, approximately 94, 40, 60 zone that are acting as good support, while range floor at 92.64 is seen as the key support, and only break below this level would signal some stronger corrective action. So far, the structure on the near-term chart indicators shows that a mild correction could be expected down towards 94 zone, I would say, at this point. And in case of break lower, then we'll be facing a test of 92.64, below which bears, near-term bears would take control. And finally, the yellow metal that enjoys the recent rally, yesterday's turmoil seen on the news being released. First, the after the data from weekly jobless claims and housing starts that were dollar supportive, and then the yellow metal again regained the pace and extended on its afternoon's rally to 1697, surpassing the previous high at 1694 and marking full retracement of 1694 to 1625 descent. That brightens the near-term structure and averts immediate downside risk. As basically the yellow metal is still in the downside, in the down move from the larger 1795 2012 peak and the lower top at 1751. Extension of the wave from 1625 that so far retraced over, extended over 76.4 expansion, sees next upside target at 1709. That marks 100% Fibonacci expansion. Of course, before this we have the descending trend line resistance, descending bull bear trend line currently at 1706, and of course 1700 as psychological and round figure barrier. Bulls remain in play on the lower time frame charts, and seeing potentials for test and possible break above 1700. Of course, break and close above, weekly close above 1700 would be very supportive for the yellow metal, as this could be a signal for a further recovery of recent low at 1625, where we'll be looking for a test of the next significant barrier at 17, static barrier at 1723, high of 12th of December 2012. And that would be all from my side for today. I do apologize for delay. Our Arabic session will start in a couple of minutes, so we will skip today our questions and answers part. I wish you nice Friday is the last day of the week, of course, with a lot of profit in your accounts, and I wish you nice and relaxing weekend ahead of our next session that comes next Monday. That will be 21st of January 2013, and we are back at 8 o'clock GMT next Monday. Good luck.